Hi everyone, I'm Ken from Crypto Trading KS. If you're new, welcome, and welcome back to our regular community. Let's run the numbers. Bitcoin currently trading at 35,759, up 5.07%. Ethereum currently trading at 22.29, up 3.66%. If you're new to the channel, I'd just like to let you know that everything I do for you is free. Twice a day, 7 days a week. I share my experience as a full-time crypto trader. I've hidden crypto gems throughout this video. Unless you watch to the end, you'll miss them. See how many you can find. My goal is to assist you to be more of a financial blessing to yourself and those you love. We have 100% free groups on Facebook, Discord, and Twitter. You can reach out to me and direct message me anytime. We're a community-driven channel. Anything you'd like to know, please ask. Rule 138, all investors become traders. Now, what does this mean? Investors generally have a long-term perspective. They're in it for 1, 2, 3, 5, 10 years. Now, the problem with investing and not trading is people tend to get attracted into a market when the prices are increasing. We have to always be aware that whenever you buy, someone is selling. When you have institutions involved in price, they tend to drive price up, get people to experience extreme greed, or extreme optimism is a nicer word. Then they like to sell the price down so that they can reaccumulate. It's really important that you learn how to trade, thereby avoiding buying at the top and selling at the bottom, which a lot of investors do. As an institution of one in this community, we're always focused about how we can accumulate at the best possible price. That's always a good thing. If you look at the current price movement in Bitcoin, we can see a lot of green candles here going up and up and up. Price is always moving in a wave. A lot of retail investors would get sucked into this. Price is always moving in a wave, going up, then down. Any form of retracement right now would be very healthy. Rule 174, the T-cube method, trend, timing, trigger. Right in this episode, we're going to look at the trend. The trend is the longer term perspective of where crypto is heading and why, and how it relates to the stock market and the economy overall. Rule 171, zoom out. It's really important to gain an overall perspective of crypto. We look at Bitcoin because Bitcoin leads the market. No alt can escape Bitcoin's gravity. We have a look at the KS model, which is a crypto technical trading model based on institutional price psychology. We're in the bull market psychology at the moment, institutionally. Things look pretty flat at the moment. We'll zoom in there in a second. It's always important, compare same psychologies, the sun to the sun, the darkness of the moon, bear market to bear market to bear market, consolidation, consolidation to consolidation. It's really important to compare like psychologies, or else we'll create erroneous results. We'll get led in a direction that won't serve your pocket. We're in the KS model still. We've just zoomed in on the current price action of Bitcoin. From a zoomed out perspective, it looks really, really flat, doesn't it? But what do we see here? Bitcoin has overcome this resistance, making its way up to the second resistance level. Price is always moving in a wave, moving up, then down, up, then down, up. Of course, it should be healthy to move down. That's not a problem. We also know that Bitcoin is a bit of an exponential animal. It can do anything, and literally does, but we always go with the probabilities. Let's zoom in further and have a look at Bitcoin's technical analysis. We can see that Bitcoin is on a bit of a tear. It's gone up and consolidated, gone up and consolidated, and gone up and crossed this structural resistance. It's doing really well. Please take note that the Federal Reserve has a meeting to discuss inflation and the economy on Wednesday. I would imagine that would create a little bit of jitters. It has in the past. We've seen sell-offs when that occurs. So I would just ask you to keep that in mind, that we could expect some downward price momentum. It's good to prepare for that. There's also a little bit of light structural resistance coming into play around the 36,652 mark. Remember, price is always moving in a wave. It's always good to place your buy orders at support levels. Doing this helps you to lower your average cost. Price is negatively biased. It can come down rather quickly, but it can recover very fast as well. I'd like to explain just a couple of Bitcoin's properties, and these are the properties of most cryptos as well, but specifically Bitcoin. Bitcoin is an exponential asset class. It's not a linear. It's halving cycle driven. It's not a stock. You can't buy milk with your Microsoft stock. It's deflationary. It has a fixed supply of 21 million, which makes it scarce. The more people come into the market, the higher the price of Bitcoin will go, because there's only ever 21 million, and about 4+ million of those have been lost. It's not fiat. Fiat is inflationary. Bitcoin is deflationary. Bitcoin is decentralized. It's outside central government control. It bypasses the financial system. It banks the unbanked. And these are the really, really critical things to note. It is the foundation of the Internet of money. It facilitates trustless commerce, smart contracts, and all the alts build out on the Bitcoin ecosystem. It's really interesting to note that if you had the FANG stocks and you could invest in all of those at the start of the internet, that's exactly what Bitcoin is like. It's like investing in all the FANG stocks, and you can own them forever. It's an amazing thing. It's a global medium of exchange. It literally bypasses currencies. This is why governments around the world are looking into central bank digital currencies, because they want to have a part of the pie. But central bank digital currencies just really like stable coins, and they will fuel massive adoption of crypto. Many people think crypto is a Ponzi scheme. Many think that Bitcoin and cryptos have no value. They have immense value. Creating a central bank digital currency will prove to the world that crypto is real. Bitcoin and cryptos facilitate low-cost global transactions. Bitcoin is an apex exponential asset class and the foundation of the Internet of value. After understanding these properties, you'll know why each session we go through this technological adoption curve to compare total global internet users' uptake to crypto. It's really important to understand that the crypto industry is growing far more quickly than the internet ever did. It's fundamentally going to change the world. If we consider that the internet, as of January 2021, reached 4.66 billion people, can you imagine where crypto is going to go? You're literally right at the start. When you look at charts like this is just purely chart price action. It tends to ignore the properties of crypto and scarcity and the fact that it's a limited supply of 21 million. When these lines are drawn, which constrains the price down, what you in effect are saying that Bitcoin is not the foundation of the Internet of money. It does not have a fixed supply. As more and more people come into Bitcoin, the price will not change. I believe that is absolutely not true. It's really important to supplement normal technical analysis, normal mathematical analysis with an understanding of innovation. I published an article on Medium, and it was why Bitcoin is misunderstood by experts and why do experts regularly fail to predict the future. I gave a parallel to flight. For 2,500 years, people thought that flight was impossible. There were very, very high-ranking people, for example, the president of the Royal Society of London, who said in 1895 that flying would never happen. People are saying the same kind of things with Bitcoin. And when flying was happening, when the heavier than air flight was actually a reality, some very high-ranking people just said, well, it never will be commercial. The problem with this kind of thinking is that it's applied to crypto at the moment. I would suggest you read this article if you have the time. It will really help you. It gives a lot of insight into why people just really don't understand what they're investing in at the moment. Bitcoin is the foundation of the Internet of Value. It's the most incredible thing the planet will ever see. The Internet has been around for a long time. Hootsuite's Digital 2021 report had the headline, 500 million users joined social in the last year alone. My goodness, it just goes to show you that the internet is evolving. When the internet was founded, I was actually there in 1993 running an internet service provider where people use their modems to dial up and access the internet. Look at this, global mobile users have reached 5.27 billion, equating to just under 67% of the world's total population. Back in 1993, we could have never have imagined what was happening and what would be happening decades and decades later. Because I was there at the start of internet adoption, I see all the same games playing out in crypto. It's like, I've been here before. This is really interesting stuff. Let's use rule 1112 to understand the true trend through the chaos process. Here we look at on-chain, off-chain market data. We're trying to gather probabilities to understand where the trend is going. The critical thing is rule 181 to compare the same psychologies from the chaos model. That means that we look at various peaks. We can see the bull market peak here in the 2016 halving cycle and the bull market peak here in the 2012 halving cycle, and we just compare it to current price action. Looking at on-chain data, Bitcoin, the number of transfers to exchanges, all exchanges, this is current as of right now. We can see the current number of transfers to exchanges is very, very low. We can see at the previous peak it was very, very high. We're a long way away from this. We're comparing the same psychologies. Current price action in net unrealized profit and loss, or NUPL, is down here in this yellow area, which is called optimism. We go back to the peak, we can see this blue euphoria area. Optimism is back here, or back here. Let's take that as a play. We can see there's a long way to go. We can just look back one cycle. If we have a look at Bitcoin realized cap hodl waves, we see 1, 2, 3 prongs. We've only got one. We expect 2 and 3. Here we're looking at Bitcoin number of addresses with a balance greater than 1,000 Bitcoins. We can see this was selling off. This is the line of more than 1,000. Now it's basing and in an accumulation range. We can also see that there's been an uptick in accumulation, and that's following price. It's good to look into the Bitcoin stablecoin supply ratio, SSR oscillator. We can see that the number of stablecoins being deployed into Bitcoin is increasing. This is generally accompanied by increasing price. Rule 193, check the stock markets. We need to check the stock markets because so many times in the media you'll get different articles saying, oh, this happened in the stock market and this happened in the stock market. You need to have a comprehension as to what is going on, or you'll get really confused and shaken out of your position. We can see the US, the largest economy in the world, is in early stage recovery. It has a long way to go to mid-stage recovery. That means there will be accommodative federal government stances on money, interest rates, and stimulus. We do have a potential curveball that we need to keep our eye on. It's the Delta strain of the COVID outbreak. We can see weekly case change in the US is plus 47%. They've had 345,928 cases in the last 7 days. This is good to just understand what is happening. COVID is wreaking havoc across the world. France has had 164% increase. We're really looking for these negative numbers. We want these COVID cases to go down. Vietnam, 115% increase in a week. It's very scary. The Delta strain could throw a spanner in the works. I just want you to be aware of that. It's a potential risk that we have to factor in. The markets are always full of risks. We just do our best to make sure that we are staying ahead of the game. This particular website is worldometers.info/coronavirus if you would like to check it out yourself. We'll always keep our eye on this. Oh my goodness, Iceland plus 900%. This is something that we need to keep an eye open for. This could cause a potential crash. There are always tremors that play out in markets because smart money doesn't like to get caught on the wrong side of the trade. We therefore look into the US market, which accounts for about $56 out of every $100 spent globally on stocks. What I'm doing here is tracking confirmed COVID cases. If you've got TradingView, you can just put confirmed in to see this graph. I always share all my data with everybody, but you have to take a bit of effort. I can't just send these things to you. It's too much. I've got too much on my plate. I want to focus on creating content for the community. So deaths, we can see deaths going up. This is COVID deaths. We can see recovered going up. That's good. Now we'll look into more macroeconomic issues. This is the CPI index for the US. We can see the CPI index is increasing. The real to money supply is increasing. This is all the stimulus coming into the economy. We can see the GDP, gross domestic product, which is just GDP. You can put that into TradingView. You can see GDP took a hit with the COVID crisis. It's recovered. We still have to keep our eye on the Delta variant, where actually the economic systems are far more robust at the moment than they were when they didn't even know COVID existed. So if we get any kind of downturn, I think it will be just half this or a third of this, but we need to keep our eye open. We can look at federal government debt, gross federal debt. Here, it's on the way up. Total public debt is on the way up. Federal debt, total public debt as a percentage of gross domestic product is on the way down. That's a good thing. Let's just have a look at the unemployment rate. We can see the spike in unemployment caused by the COVID crash, and now it's recovering. We're not seeing a spike in unemployment with the Delta variant just yet. We need to keep our eye on this. There are many signs that occur before things tend to crash. It's really important to echo Peter Lynch's comment here, quotation, in your mind all the time. Far more money has been lost by investors preparing for corrections or trying to anticipate corrections than has been lost in corrections themselves. If you prematurely cash out and price moves up, you're missing out on that gain. We have to walk a fairly tight line. It's important not to be too fast. These things can happen, but everything we do is on the side of just getting an early warning system together. I had a few members of the community reach out to me by private message saying, Ken, can you talk about stagflation? I'm really worried. Now, what is stagflation? Inflation going up, GDP going down, unemployment rate going up, recession. We track these things every single day. We're going to be right on top of it. So you say, Ken, that's great, but what is stagflation? Pretty fair question. Stagflation is when the inflation rate increases, economic growth slows, unemployment is high. Now, what does that mean? It means a lot of people are out of work, they don't have a prospect of getting a job, and the prices are going up. That's a bit of a nightmare. That actually happened in the 1970s. We're not seeing anything like that now. We'll keep our eye on all the economic data every day. Just be careful of what people say. There's a lot of sensationalism out there. In this community, we cut through all of that. All of our analysis is very crypto focused. Bitcoin moves the market, so we're really, really keen on understanding Bitcoin's trend. You can see Bitcoin is doing well. It's crossed across that resistance and doing well right now. Now, let's have a look at inflation. What's happening here? The inflation rate, the 10-year break-even inflation rate, is increasing. We've been tracking this for quite a while now. We see this increase. Let's have a look at the 5-year. The 5-year is also increasing. What about the forward expectation, inflation expectation rate? That is also increasing. Let's have a look at interest rates. Interest rates have a resistance here. They're below it. They have a bit of a way to go to hit resistance. Now, something good for you to understand, this is the price of Bitcoin here in gold. We're always tracking, looking for association. We don't say it's causation. Statistically, that's not necessarily the case. We just say there is an association between these things. Let's have a look at the major indices. The Nasdaq 100 is increasing. It has had a very, very good run up. Just a little bit of price weakness, a wave up and a minor wave down, a wave up. What tends to happen when we see extended waves up is there can be very sharp sell-offs. That's kind of what we want to avoid. Here, the Nasdaq was going up and up and up. It had this little blip and went up and then sold off. We would anticipate the Nasdaq coming back and retesting this support at some stage and then going further. Please note that when the Nasdaq and all the indices start to retrace, the media will make hell on earth about it and say the markets are crashing. The markets will not be crashing. They will just be doing normal price action, especially if it's to support. Look at how Bitcoin has taken off. This is what I was saying. Bitcoin is really, really volatile. Let's have a look at the S&P 500. We can see Bitcoin playing in amongst the background, and the S&P 500 has a lot of upward support. I had a thesis that the markets may rotate between the stock market and Bitcoin and drive Bitcoin's price up. Let's see what happens. With the Russell 2000, this support was broken. A lower level of support has been broken too. It's been retested, it's resuming down. That's showing weakness. Looking at the Dow Jones, it's similar situation, a level of support, just wavering around here, trying to get above the all-time highs here. It's starting to consolidate. That's looking pretty good. Let's have a look at Apple. Apple is doing really well. It's at support. Looking at Amazon, came through this resistance, came back, retested, and resumed off. Facebook, holding support. Let's have a look at Google. Holding that support very strongly and starting to break out to another level. Google's doing really well. Microsoft holding support. Netflix has been a little bit weak. It got above this resistance and it failed, and it broke through this support and now has turned that to resistance. It's quite interesting if you think that Netflix is a stay-at-home stock that should do very well in a pandemic if we were to get another series of lockdowns. Nvidia, done well above that support, resuming off. Square, a little bit weak. It's got a lot of overhead resistance in this area, but it's doing quite well recently. Square has 8,027 Bitcoin. Having a look at Tesla. Tesla overcame that resistance. It's turning it to support and consolidating through this support. Tesla has 42,902 Bitcoin. Let's have a look at how Bitcoin is performing. It's very interesting to note that the total number of Bitcoin has increased from 1.46 million to 1.47 million. The holdings in ETFs have actually gone down from 818,775 to 816,379. Countries have stayed the same. Public companies have increased a little, and private companies have increased a lot. Look at that. Go private companies. Now, what I would like to do is to explain a little bit about this price behavior. From a trading perspective, this is very bullish, isn't it? Green, 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 green. What I see is something like this. I believe that we're going to have a wave down that may catch a lot of people by surprise. It's especially useful to call in shorts at these times. I think it's always helpful to just view this as advertising. Do you remember how advertising occurred here and people were pulled into the market and then sold down? Many people bought at the top. I think that what we're going to see is price forming a lower high, which is healthy, and it charging up over time. But just beware, price is negatively biased. Even though we can get these big outbreaks, we've just got to take it easy, always buying at support and waiting and letting price come to you. Total crypto market cap has recovered to $1.501 trillion. Let's have a look through the crypto funds, ETFs, and trusts. ARK Innovation ETF, just weakness here at the moment below that support and just seeking to make support below that resistance now. ARKW playing the same but a little bit stronger because it's internet related ETF. CoinShares physical Bitcoin on the way up. Of course, it's following Bitcoin's price. This is exactly what we would expect. These will open up strongly when the US markets open. Let's have a look at the Purpose Bitcoin ETF. That will go up. There's no trading currently on these particular devices, but when the markets open, for example, Grayscale Bitcoin Trust, we expect a big rally. QBTC, the Bitcoin fund in Canada, again, we will expect a jump up in price. These haven't changed since the last episode. Crypto stocks, ADE, we'll just go through them quickly. Voyager, still below resistance. Hive Blockchain, consolidating. Bitfarms, underneath resistance. Argo Blockchain, looking pretty good. We know that the price of Bitcoin is a massive driver here. Coinbase Global, consolidating. Galaxy Digital, under resistance. Mara, just under resistance but consolidating. Riot Blockchain, same as Mara. MicroStrategies, same as Mara. Silvergate, this is quite good. It's showing more strength. Let's look into the defensive sectors. The airline index. If the Delta strain is going to cause problems, we're going to see early warning signs here in the airline index. Let's have a look at the dollar, the DXY. The dollar is strengthening. A lot of people say that there's an inverse relationship, which means that as Bitcoin or as the dollar goes up, Bitcoin comes down. You can see that is clearly not the case. The price of Bitcoin is overlaid on the actual dollar. I've seen over decades that many people think a relationship is occurring. If they just check the charts, they know it was not occurring at all. Let's have a look at copper futures. Copper is typically something that is economically sensitive. This gives an early warning sign. This is recovering back to that support. That's a good sign. If we look at high yield corporate bonds, a little bit of weakness, but re-emerging over that support. Let's look at lumber futures. They've certainly crunched down significantly. We'll keep our eye on lumber. Having a look at the 10-year, 20-year treasury bond ETF coming up, but showing a general uptrend here. Let's have a look at the 10-year treasury note yield. It's fallen below that support. It's now acting as resistance. The 30-year treasury bond yield has come up over that once resistance, now support. Let's have a look at the fear index, the VIX. VIX, fear, is falling inside the market. Let's have a look at silver. Silver's maintaining its uptrend. It's shown weakness. It consolidated really well, but then it broke down. Let's have a look at gold. Gold is a flight to safety asset. We're not seeing any flights to safety here at all. Let's have a look at the utilities. The utilities are registering an uptick. We'll just keep our eye on utilities. It's typically a defensive sector. Looking at the transportation ETF, we can see this level of support has been held. Let's have a look at Brent oil. We can see this long-term support has just recently been cracked through, but it's turning it back, this resistance back into support. We see the same thing with light crude oil. Broke through support, came up to the resistance, retested, and it's just hugging that support line now. At the start of the episode, we were down here below this blue line. Look at what's happened. Bitcoin is a real animal. It does what it wants to do. It's really important to understand that we can get these very big spikes up. They're intention spikes. Price wants to go this way. That's what it's telling us. We would expect a lot of selling pressure to come in now. If price comes back, does a wave down, establishes this is a low, a higher low would be around here somewhere. If that does that, that is exceptionally positive price behavior. Don't worry about if price wavers around a little. Nothing in the stock market is any cause for concern. Maybe you would like to talk about Peter's quote about how preparing for a stock market correction is not a good idea. Maybe you'd like to put your take on that in the comments. I think it's a really, really important lesson. We're just putting an early warning radar system in play across every market. We do the most extensive analysis possible on this channel. We cover so many dimensions in this trend episode precisely to explain why price action like this is not only realistic, but it's the nature of Bitcoin. These sharp spikes down and sharp rallies up are what Bitcoin is all about. It's a highly volatile, exponential asset class. A hidden crypto gem is to understand the relativities between the main markets, precious metals such as gold, and crypto, which is the new monetary system. You can see over the past 1 year, the new monetary system has increased significantly, up 290%. Gold hasn't done so well, down 6%. S&P 500 has rallied 36%. What people, high net worth individuals, people with a lot of money, enough money to move the markets, they understand that Bitcoin is a proxy for the Internet of Value. It's like owning Facebook, Google, Amazon, Twitter, all in one. Just one coin owns them all. It's like Golem. One ring controls them all. Bitcoin tends to control the crypto market. An investment in Bitcoin, or cryptos for that matter, creates an incredible level of returns over years and years and years. You can see that this is the yearly growth. The most important thing to understand is that investors really can't put their money in banks. They can't put it in bonds, precious metals. Well, they can put a fraction in precious metals. They can put it into the S&P 500. That's certainly better. These stock market returns are better. But crypto, as it accumulates widespread mass adoption, will just continue to see these percentage growths, because a lot of people don't understand what crypto is. The hidden crypto gem is that Bitcoin is the basis of the new financial system. It's the basis, foundation of the Internet of Value. You might like to, if you've heard this particular secret, you might like to put it in the comments, like something, oh, the internet is doing very nice, it's founding a new path forward, or whatever you like. Just be creative. It's always a bit of fun. There are some headwinds for the market, but in summing up, we don't see anything major arising right now. It's nice to see the market so green, but understand green one day, red the next. It's really good if you have some spare cash, if you're in a position that you have profited and you are trading. We always say buy the falling knife. I haven't shared the rule with you yet, which is sell the sharp spike up. That's what I've done recently. I think it's really important that you understand everything in Bitcoin is highly volatile. You can make a tremendous amount of money by selling spikes, buying back lower, selling spikes, buying back lower, buying real spikes down, which is really fun, but most people run away from those. But when you become an institution of one, you will look for those. Let's have a look at the Ethereum tokens. We can see a lot of tokens are doing very well now. Of course they are, because as Bitcoin goes up, all the tokens are dragged by Bitcoin's gravity. That's another hidden gem. If you understand Bitcoin's gravity, you will understand far more than most people do. I hope you found the content useful. Everything I do for you is free. If you would like to keep abreast of these movements in crypto twice a day, 7 days a week, please consider subscribing to YouTube and following or joining the free groups on Twitter, Facebook, and Discord. Crypto is volatile. Always prepare yourself for the best and worst case scenarios. Reality will likely be between them. Stay safe out there. Take care and see you next time. Bye for now.